We explain three rarely discussed taxes: sin tax, nanny tax, and negative income tax. Let's talk about three types of taxes that rarely receive media or experts' attention, but that most of us, at some point, have paid for or are going to pay for. For example, nearly all American taxpayers are subject to sin taxes, despite the levy's uncommon name. Welcome back, folks, to another edition of Sweetie Kiwi. How you doing today? I'm doing fantastic, and I'm here to have a conversation around what people call three rarely discussed taxes: sin tax, nanny tax, and negative income tax. If you are doing as great as I am, go grab a cup of coffee or tea or vodka, and let's roll. So, what is a sin tax? Let's start with sin taxes. What is a sin tax? A sin tax is a special consumption tax on products that are considered sin-related or sinful, if you will. So those include alcohol, tobacco products, and sugary drinks. All of those three categories fall under the heading of a sin tax. So relatively few Americans think of drinking, smoking, and consuming soda as really sinful. But these special taxes regulate behavior we find unhealthy or distasteful. Sin taxes are useful sources of revenue for state governments. Now, sin tax is the same as excise tax. In other words, if you hear the words excise taxes or sin tax, those are interchangeable. The definition of an excise tax is a tax levied on certain specific goods or activities, whereas a sales tax is a blanket consumption tax on all goods, often with the exception of groceries. Excise taxes single out certain products for an extra tax hit. For example, if you have a gas tax, this is an example of an excise tax. There are also excise taxes on commercial activities like driving commercial trucks on the highway or running an indoor tanning salon. So if your business is subject to those federal excise taxes, you must be sure to file them in paper or online for each year that you owe. Sin taxes are excise taxes on goods considered to be morally hazardous in some way. Now, you have to understand that as a country, we may have repealed prohibition back in the days 70 years ago, but we still think of alcohol consumption as something to be moderated and regulated. So one way of going about this is by applying a sin tax to sales of alcoholic beverages, right? So that's an extra fiscal over and above any applicable sales taxes. That's why if you usually go to supermarkets and you buy alcohol, they are usually very expensive. They're more expensive than regular drinks. So in theory, the sin tax acts as a slight deterrent to the purchase and consumption of alcohol. It also allows the government to raise revenue without jeopardizing its popularity too much, right? So few people will fight for low taxes on the booze the way they'll fight for lower income taxes and property taxes. We also have sin taxes on cigarettes. So tobacco consumption is a public health issue, and therefore sin taxes on tobacco consumption are both revenue sources and a weapon in the fight against the many diseases caused by smoking. So you probably have heard, and I'm not here to give you life advice, you probably have heard that smoking isn't great for you. So to reduce the public health toll of smoking, not to mention all the money spent treating diseases caused by smoking, the government imposes sin taxes on the sale of cigarettes. So these levies, along with all the lovely pictures of diseased lungs you see on the cigarette packs, public information campaigns, and limits on the marketing of cigarettes, all of this are part of the continuum of procedures that authorities use to discourage tobacco consumption, particularly among the youngsters. Besides alcohol, cigarettes, we also have sin taxes on soda, right? I mean, of course, you might think that drinking sodas is nothing bad, is not sinful, but the jury is still out there whether or not it has a good effect on our health. Obesity rates in the United States have reached levels that are way ahead. I'm not even going to talk about that right now. Public health experts, authorities have said it. It's just crazy what's happening out there. So you have had in the past 20 years sin taxes on sugary drinks. Over 30 states impose some kind of special tax on sodas and other sugary drinks. So far, it's been hard to see any relationship between these taxes and any substantial decrease in the consumption of the tax beverages, because people are still drinking them anyway, right? So this is basically the all you need to know about a sin tax. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We are talking now about the nanny tax. We've talked before about the sin tax. Let's talk about the second rarely discussed tax, a nanny tax. Now, you are paying a nanny tax if your home is someone's workplace. If you hire nannies, babysitters, or home health aides, the answer is probably yes, you have paid the nanny tax before. The loan company you use, the foreman, where the foreman hires, direct, and pays his guys, not your employees, but the people you hire directly to do work that you specify and direct in your home, they are your employees. You should be paying the nanny tax for these employees. Now, let's talk about the rules, the nanny tax rules. Now, the IRS has been very clear in the last 5 to 10 years about what triggers the add-on to your federal income taxes, known as the household employer tax or nanny tax. So if you hear the word household employer tax, it's the same thing as nanny tax. Now let's go to, if you want more info, go to www.irs.gov. We took a direct quote from the IRS website. You pay a nanny tax if you have a household employee whom you hired to do household work, and that worker is your employee. The worker is your employee if you can control not only what work is done, but how it is done. If the worker is your employee, it does not matter whether the work is full-time or part-time, or that you hired the worker through an agency or from a list provided by an agency or association. It also does not matter whether you pay the worker on an hourly, daily, or weekly basis or by the job. So as clear as those IRS rules are, the nanny tax has an extremely low rate of compliance. People have done research. Labor law experts estimate that between 80 to 95% of people who should be paying the nanny tax aren't doing so. Right? So you have right now the IRS in the last few years has been tightening the rules. So for 2020, you have the nanny tax will kick in after a certain threshold, and that threshold in 2020 was $2,200. So if you pay someone a wage at or above that threshold, you should be paying nanny taxes. So you have the federal unemployment tax, VITA, that kicks in if an employer pays an employee $1,500 or more in any quarter of a calendar year. Nanny tax non-compliance starts when you hire someone to work in your home. You should have that person fill out nanny tax form, an I-9, again, I-9, and a W-4. You'll need their social security number or tax ID, and you should register yourself as an employer with state and federal tax authorities. Then, come tax time, you will need to fill out IRS Form 1040 Schedule H. Let me repeat that, Schedule H, household employer tax. So if you dread filling out forms as much as most of us do, you can basically hire an accountant to do that for you. Why do you need to pay? Again, as I said earlier, the majority of Americans right now are not complying. You need to pay because it is the law. That's the first thing. If that doesn't motivate you, you want to think that the IRS might punish you. The IRS has sued folks for back taxes in the tens of thousands of dollars for unpaid nanny taxes. One of the biggest reasons to pay your nanny tax, though, is that it helps your employee, right? So if the person who works in your home is working off the books, for example, or he or she is not making the Social Security tax payment that translate into checks in retirement, plus disability, life and survivor insurance, then that person is really not having a strong foundation for their golden years, right? So being on the books offers benefits beyond Social Security. If someone whose employer doesn't pay nanny taxes gets let go, he or she generally cannot access government unemployment insurance because your ex-employee won't have employment history as far as the IRS is concerned and will not have had any unemployment taxes withheld. So if you care about the person who works after you, who looks after your kids, who looks after your parents, your spouse, or your home, you should pay the nanny taxes the law requires. All right? Now, nanny tax deductions and more. If the nanny tax sounds like something you cannot afford to pay, you should know that there are some tax strategies and credits that take some of the sting out of the nanny tax. For example, if you or your spouse has access to a flexible spending account, an FSA, through work, you can pay for up to $5,000 of child care expenses with pre-tax dollars in your FSA. So this, in a sense, represent a substantial savings over the course of the year. Think about it, $5,000. If you have no FSA, you can file for the Child and Dependent Care Tax Credit, and that's on Form 2441. You can claim up to $3,000 in child care expenses per year per child, up to a maximum of $6,000. So if you have 2 children or 3, it's still $6,000. So the money you claim must have been used to pay someone other than your spouse to care for your child or children so that you or your spouse could work. That's because, according to law, the Child and Dependent Care Tax Credit is designed to give parents an incentive to join and stay in the workforce. All right? So that's for the nanny tax. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. If you love the content you've been hearing so far, please consider smashing that like button and subscribe to our channel, and also turn the notification bell so you are informed day in and day out whenever we drop a new show. And we do this every single day, rain or shine. Comment below, let us know your experience when it comes to taxes, if you have known those 3 rarely discussed taxes before, and also share. So we've talked about the sin tax, we've talked about the nanny tax. Let's talk about now the NIT, the negative income tax. Now, the idea behind a negative income tax is to give poor people money. I know this is a very hot issue, very controversial right now in the country, or in the whole world anyway. So, but I'm just here to explain. I'm not taking sides here, whether I'm Democrats or Republican or liberal or progressive or conservative or independent. No, let's stick to the fact. So when a person with no or low income file for federal income taxes, he or she will then be eligible for a lump sum payment. So the amount of the payment will vary based on household size and need. In other words, someone with no income will receive more money than someone with a little income, and someone middle or high income would not receive any NIT at all, any negative income tax. The payment could take in the form of a large refund at tax time or be divided into monthly checks. The negative income tax is a potential tax policy that's often discussed in conjunction with a guaranteed basic income. You've heard about those things. We're basically having a conversation in our team about a future program on that topic. So guaranteed basic income, and is also known as the basic income guarantee, the BIG, or the universal basic income, UBI. The scheme here is that the idea is that the BIG, the basic income guarantee, will give everyone money. It will provide a floor income or safety net, but not just for the poor. So the NIT is also different from its closest existing relative in the U.S. tax code, the Earned Income Tax Credit. In order to qualify for the Earned Income Tax Credit, a person must be working. The idea behind the NIT is that it would be available to anyone who needed it, regardless of employment status. So whether you're working or not, you still get the NIT. That way, it would capture poor people who currently go without government help or are helped by a variety of government programs. Now, there are reasons why people support and are against the NIT. Let's talk about the support the supporters of the NIT. People support the NIT because they think it will help people and the economy. In other words, poor people are getting money so they can spend, right? So this will boost the U.S. economy at large. And it will also address problems like child malnutrition. Another reason why people support the NIT is that it would reduce the red tape, right? Because if you think about all the convoluted process that goes through the IRS red tape, people are thinking that if you are able to give a direct tax refund to the poorest of our populations, the IRS could focus more on what its mission, which is to collect taxes from the working force, from the active force. Cutting red tape is appealing from the perspective of the person receiving the aid too. So no more standing in line for benefit checks or providing eligibility for targeted programs for veterans, for example, single moms, or other constituencies. The third reason why people support the NIT is that if you count on wage growth, we've seen that this approach hasn't worked in the last 20 years, right? You've probably heard, if you've been listening to CNN or other news media, NBC, ABC, Fox News, the media in general, you probably have heard that inequality is on the rise, right? So Americans are great at boosting worker productivities, but not so great at boosting workers' wages. So this has led some researchers to say that the mechanisms that reward low and middle income workers for their hard work are broken. So a lot of researchers are saying that by implementing the NIT, the negative income tax, we would be able to boost the economy at large by boosting workers' wages. Now let's talk about the cons. Here are three reasons why people don't support the NIT. Number one, it might discourage work. In other words, this will reduce the incentive to seek active work, to be employed. People might be just lazy and just chilling and relaxing and expecting government aid. And this is really counter to the whole notion of American, the whole notion of American mobility, professional mobility, upward mobility, the notion that if you work hard and if you are not lazy, you can make it. So the critics of that NIT are saying that this might discourage work. The second certain item of criticism that we hear is that it will cost money. It will cost more money. That's more taxes. Especially conservatives are saying that. So it will cost more money, so that if you have more programs than we can afford, and that our current programs are headed for bankruptcy, such as Social Security, the Social Security scheme, people are saying, listen, where is that money coming from? And the third reason why people don't support the negative income tax is that it's not universal. A universal basic income would give everyone the same amount, but tax is differently based on how much other income a person had. With an NIT, on the other hand, only some people will get checks. The NIT will be a linear program, but the lack of universal coverage could be a problem, because people tend to support programs that are universal much more than they support targeted programs. So this is right now the conversation going on. But just remember that the idea of something like the NIT or UBI is attracting more interest as inequality levels rise and wages for those in the low and middle income brackets remain relatively flat. All right, folks, this is it for today. I really appreciate your attention here. I have explained to you 3 rarely discussed taxes: sin tax, nanny tax, and negative income tax. I will see you next time. But until then, remember, stay marvelous.